election. We know interest rates are going to go down. We're probably going to see weaker performance in the economy, weaker numbers in the stock market. All those lead to the Fed dropping interest rates. If the Fed's going to drop interest rates, come on, what's going to happen? If you own bonds, treasury bonds, are going to make more money because the price is going to go up. I've got money sitting in my banking system. I don't want to invest that money in the stock market. And I know that if I take the money out of the policy and I do something with it, I still make interest and dividends on all the cash value in my policies. It's called uninterrupted compounding interest. Every payment I make on this stupid car I just bought is money I have in my policy the next day. Do you understand that? I lost no control of my money. I lost no control of my money. So where was my risk? What's going on, everybody? It's another week, another wealth webinar. Today, we're going to do something special, something I could never duplicate, something that will never, ever happen again. I'm going to get you ready for how to not lose money if we lose the market. If after the election in November happens, there's a very strong and high probability that the markets are going to go the opposite direction. We're going to see the markets go down. I've studied the past 5 elections. In the past 5 elections, especially elections where a president is running for a second term, like we are now, the markets have always gone up, and sometimes very steeply during the election year. Sound familiar? Sounds just like what we're dealing with now. But what will happen is after the election, very soon after the election, we will see the economy soften. We will see the market start going down the other direction. I don't want any of you to have to deal with that. I don't want you to have to worry about that. But you got to listen to what I'm going to talk about. Listen, I'm not making this up. Do your own research. Do your own due diligence. The markets will not stay high. I want to tell you one reason why. I hit this in WTF this morning. What the F? Jerome Powell just came on today and said, yes, they're having success with inflation coming down, but they're not there yet. Why was that published? Why was that headline news today? And why is Jerome Powell in the news all the time? I'll tell you why. The markets and everybody else wants the Fed to drop interest rates. The Fed has already came out earlier this year and said they were opening the door for 3 rate decreases in 2024. We have had no rate decreases. We have had rates stay exactly where they were, which is higher for longer, like they said. So when they said that they were keeping the door open for 3 rate decreases, it got the markets really excited. Speculation kicked in. Everybody got excited. Manipulation kicked in, and the stock market hit all-time highs, which it stayed at those levels. Yes, it's been bouncing around, but we're still at heightened levels of the stock market. But here is what's probably happening. Number one, the Fed doesn't have rates where they want, doesn't have inflation where they want them, so they've kept rates higher. But as we lose the market, see, the Fed knows the same things I know, but probably way more than I do. They know they're going to lose the market. The Fed is like the little boy that put his finger in the dike so that the dike didn't burst open. You guys have heard that story, right? You can kind of envision that. You got a dike, or just call it a dam. It's leaking water. You stick your finger in it to stop it from leaking. Great, problem solved, right? No, it's a Band-Aid. When you take your finger back out, when you want to go home and eat or go sleep, the dam is not fixed. That's the Fed. The Fed's got their finger in the hole, the problem, okay? And the problem isn't fixed, it's Band-Aided. They've printed unprecedented amounts of money. They have kept rates too low for too long. They've done a lot of things, including just crazy amounts of printing, rate manipulation, and everything else, keeping the economy where it's at. Well, folks, the Fed, Jerome Powell and the Fed, are looking to remove their finger from that hole. The dam, the dike is going to burst. I'm telling you, they are already telling you what's going to happen. They pretty much know they can't soft land this thing. So they're trying to keep it as long as possible because, hey, listen, you got a president running for a second term. Once the Fed disengages, once the Fed leaves the party, I also mentioned it earlier, it's like the Fed or Jerome Powell is like that drunk friend who's at your house. You have a party, a little group of friends get together, and there's always that one friend that drinks too much, gets belligerent, everybody else is talking about them. And they're always the one that leaves last. And when they leave, they usually fall, break the end table, fall and do this. The vases fall over with the flowers. You've all seen this. That's the Fed. The Fed's got to exit this thing, but they're drunk. And when they're exiting, how much damage are they going to leave behind? That's the question you need to be asking. How much damage is it going to leave behind on your 401k? How much damage is it going to leave behind on your investments? How much damage are you going to have to fix when the Fed exits this thing? Well, that really is a question that you can answer. It's going to hurt us all. If we enter a recession, when the markets give way, it's going to hurt us all, myself, Stephen included. But it's going to hurt some a lot less. And I will tell you, it's going to hurt me and Stephen a lot less because we are ready for this. So how do you get ready for something like this? Because there is no magic pill. There is no timing the markets. You cannot do it. And there's no beating the Fed. There's no beating the Fed. People have tried. They almost went bankrupt. Smartest mind in investments, smartest mind in Wall Street is Ray Dalio. He almost went bankrupt trying to beat the Fed. Not beat the Fed, but just trying to get ahead of the Fed. In other words, don't fight the Fed. You just follow along. So here's what I can tell you. There are two paths you can choose. One, which all of you voted you wanted to go down this path. You're going to see me buy a car, just a stupid car, my unicorn. It's dumb. Don't get caught up in the numbers of the car. Don't get caught up in anything. Why would I want to buy a car and teach you how to do it? Not because it's a good investment strategy by any means, but because it's a safe way for me to move my money. I am not investing in the stock market. Many of you have an advisor. Many of you have money in the stock market. Good for you. You've done very well. You've been part of the longest bull run in history. Congratulations. Put your hands together. Pat yourself on the back. Whatever you want to do. Great. Now I'm going to challenge you. Here's your challenge, folks. All of you that have money in the stock market, I am challenging you right here, right now. Keep it. That's my challenge. Keep it. Show me how you're going to keep the wealth and the riches that you've made in the longest bull run in history. In the chat right now, if any of you have like just a strategy and you think on how you're going to keep what you've made, do tell me, because that's the difference between being rich and being wealthy. There's a major difference between someone who's rich and someone who's wealthy, and many of you know the answer, but I'm going to give it to you. Somebody that's rich will be the next poor person because they have not understood or learned the fundamentals that a wealthy individual has. And a wealthy individual has learned one thing different than somebody that's rich. They have learned how to keep it. They've learned how not to give the money back. So let's just lay out the fundamental facts. Number one, there's nothing we can do. The serenity prayer, recite the serenity prayer. There's nothing we can do or control about the election. It's happening. We have no control over that. We really don't have any control over who's going to win, but let's vote because that's what the United States of America needs. It needs our vote. Vote smart. Vote for who you believe in. I don't care who it is. You got three candidates. Vote for one of them. Okay? That's going to happen. We know that the markets are probably going to stay at fairly heightened levels up to that point. So you can keep putting money in your 401ks, keep putting money in stocks. You are buying high. Fact. We can pretty much know that the Fed is going to lower interest rates into the future, whether it's later 2025 or, later 2024 or into 2025. We know that to be fact. So let's just go off of those facts. If we know there's going to be an election, if we know rates are going to go down, and if we can speculate or think that if rates go down, that would mean that the markets are going down or should go down, then we can all come to one conclusion of how you should invest your money, and I can give you two paths. One of them, right behind me, I just want you to kind of look over here. When you're talking about investing, I want you to look at risk versus reward. Single-handedly, the biggest mistake investors make. They put way too much emphasis on reward and not enough emphasis on risk. They hear about this stupid investment that pays them 40%. I'm not going to tell you which one this was, but it's not a good one. And it's not one we endorsed, condoned, or even said anything good about. Okay, there was one where it was like 40% return. Okay, so when I say that, how many of you would be like, oh my God, sign me up, 40%, I want in, right? You do. But what is the risk? You see, this investment, when it first was posed to me, and it was brought to me by several people, it didn't pass the sniff test. You all know what the sniff test is, right? It's like you got an investment, you look at the just surface level stuff, and you go, ooh, stinks. It didn't pass the sniff test. So I was out. Well, I was out. That was it. Okay? Want nothing to do with it. But I know a lot of people who have been, who have invested in this, not through us, but around. I was at an event not long ago, and all these people in there kind of discussing the problems they're having with this, and I'm like, what part of the sniff test did you guys not do your due diligence on? The reward was like blinders. The reward made people make stupid decisions, emotional-based decisions, not logical decisions, because if you were looking at it from a logical standpoint, you would have said the risk is way too high. There are too many things that don't make sense about this investment. There is no way that's a sustainable return in real estate, so that doesn't make sense. There's no reason why they shouldn't provide these documents. That doesn't make sense. Everything they said didn't make sense. The risk outweighed the reward, but yet people still went for it. I don't know what the outcome will be, but probably not good. We must look at the risk versus reward. Everybody is going to have a different risk versus reward. Yours is different than mine. Mine is different than Stephen's, and Stephen's is different than Brandon's. You all understand that. So how do you mitigate risk? Diversification, flight to safety, like things like CDs, money markets, savings, bonds, real estate, okay? An alternative asset class, different and outside of the normal investments like stocks, bonds, mutual funds, right? Real estate is an alternative. Being the bank is the ultimate. Lending, okay? So down here or over here, money in motion, private lending, infinite banking concept, learning how to be the bank, learning how to move money, learning how to control money. That's just the process of the infinite banking. I'm just telling you different ways to mitigate risk. Secured investments, collateralized private lending, like security, tangible things like real estate securing your investment or your loan. Okay, things like buying a forklift that's going to be flipped. You own that collateral. You own that tangible asset. It has value. Stocks do not have collateral. Stocks are just, it's all speculation in some cases. It's fundamentals, speculation, and, well, hey, if it goes up, great. If it doesn't, oh, well, you can't do nothing about it. So what I'm going to do now is I'm going to talk to you about something I've talked about a lot, but sometimes we just need a refresher, and then we're going to jump over to the car. Fair enough? Okay, so treasury bonds are what we're going to talk about. But we're not going to just talk about any treasury bonds. We're going to talk about all treasury bonds. Real quick, if I may, I'm going to share my screen, and I want this to be the baseline. Treasury bonds are probably one of the most boring investments you're going to look at. They're not sexy. They're never going to make you tons of money. They're not going to be something that your advisor is going to be like, oh yeah, man, treasury bonds, those are the ultimate. Now they're talking about NVIDIA, they're talking about IBM, they're talking about Apple, they're talking about the sexy stocks. I'm talking about boring old IOUs from the United States government, treasury bonds. You are essentially lending money to the United States government. The government is then telling you in a certain amount of time, they're going to pay you all your money back. And while they use your money, they're going to pay you an interest rate. So right here, if you can all just look at the screen, I just pulled this up on Bloomberg. Here's your yields. A 3-month treasury bond, meaning you give the government money for 3 months. In 3 months, they give you all your money back. They have never defaulted on one debt. So, okay, that's a good thing. You could buy it at 5.23 per bond and a yield of 5.39%. 6-month pays 5.3%. 12-month pays 5.4. Are you all seeing a pattern? 2-year bond pays 4.7. 5-year bond pays 4.31. 10-year bond pays 4.35. And if you go 30 years into the future and you buy a 30-year bond, meaning you're lending the government money for 30 years. So in 30 years from now, they will pay you all your money back. They're only going to pay you 4.52. What's backwards about that, folks? What right off the bat logically doesn't make sense when I just tell all of you that? Anyone? I got to refresh my car thing here. Anyone? What doesn't make sense? Give that to me in the chat, please. We got over 100 people on here. When I just showed you that, what did not make sense? Well, if any of you are thinking about what didn't make sense, what doesn't make sense is if I buy a 3-month bond, I give the government money for 3 months, they give me my money back in 3 months. That should be, because that's the lowest risk, because there's really no time risk. That one should have the lowest interest rate, right? But if I give the government money for 30 freaking years, that should pay the highest interest rate, right? But they only pay 4.52. You make more money for giving the government money for a shorter duration than you do for giving the government money for a long duration. This is called the inverted yield curve. We had been inverted. And you know what? The inverted yield curve, if you look it up, and I've done videos on this, it is one of the best predictors that we are headed to a recession, because what this says is that they have to pay, the government has to pay more interest to you to do a short-term bond because there is more risk in the short term than there is in the long term. So therefore, they're saying 30 years out, things are going to look better than they are today. Therefore, we can pay you a lower yield than today on a short run, 3 months, 6 months, 12 months. We're not feeling super good. So we got to pay you a little bit more because we think And the markets think there's more risk in the short run, right in line with everything I've been telling folks. A recession is coming, a slowdown is coming, definitely going to happen. This proves it, and it has never been wrong. But with this opportunity, does this little thing right here present? Well, this is where the story gets unique. And I want you all to pay attention and listen to this closely, okay? On the screen, I've got two X's. I just want you to envision there's an X. The X marks the spot. All I want you to know is one side of the X, let's just call it this one, is if interest rates go up, what is the reaction to the price? Interest rates go up, price goes down, right here. Interest rate up, price goes down. For the last year and a half, almost 2 years, what has been happening? Interest rates have been going up. We all know that to be fact, right? So if interest rates go up, we know the price of the bonds have come down. You can buy bonds at a discount from the United States government. Fair enough? Okay, so if we know that, well, then how much are you going to be paid? Well, I didn't know how to do this. I just gave you all the rates. But what I did is I just did a blended yield. Okay, that's the easiest way. I took all those returns for the 3-month straight through the 30, 7 different bonds, 7 different bond durations, I should say. They're all treasuries. From 3-month to 30-year, and this is as of today, this number will change tomorrow, probably even change every minute. The average, if I take the 7 yields and I divide it by 7, is 4.81. Everybody got that? 4.81% is how much you would be paid for buying a blend of those treasury bonds. That's not too bad. Anyone getting that in their bank account? Probably not. Maybe some of you. But if you are getting that from your bank account, do you know why? If your CD is paying you more than this, do you know why? Because the banks went out and bought these same bonds to back your CD. The bank went out and bought those treasury bills to back your bank account, to bank that high yield savings, to bank that money market account. Where do you think banks come up with the rates? Banks take your money, put them in what they call a CD, a money market, a high yield savings. They go to the United States government and buy these treasury bonds that match the duration of your CD, and that's how they do it. They make a spread. Unbelievable. They make a positive spread. If they pay you 5%, how much are they making? Well, if you went out and bought a 6-month CD and they paid you 5, just a second ago, I told you a 6-month treasury bill pays 5.3. They make 30 bips for doing nothing? Nothing. But here's the cool part, because there's nothing sexy about 4.81. There's nothing sexy about what I told you, except for maybe some of you, your little antenna went up and you're like, buy low, good, I like that. But how do you make money? Well, I don't think any of you are excited about 4.81. It's not too bad, but how you really make money is we look at the other side of the coin, this side. We know the markets have went up, so interest rates have went up. We know the Fed is intending to drop rates. Very simple. When Fed drops rates, what happens? What happens when the Fed drops rates? Come on. The price of the bonds has to go up. This isn't my opinion. This is what every financial advisor learns when they go through their Series 7 stockbroker exam. It's the biggest part of the exam. They learn this. It's simple. It's called the inverse relationship of bonds to interest rates. The price goes up. So we already know the facts. An election, we know interest rates are going to go down. We're probably going to see weaker performance in the economy, weaker numbers in the stock market. All those lead to the Fed dropping interest rates. If the Fed's going to drop interest rates, come on. What's going to happen? If you own bonds, treasury bonds, are going to make more money because the price is going to go up. But what happened during the time when you were waiting for the price to go up? You got paid. You got paid if you did a blend, 4.81 or whatever rate. This is not rocket science, folks. This is super freaking simple. So the application here, call your financial advisor, ask them how much you have in treasury bonds. Ray Dalio's portfolio, which is called the all-weather portfolio, calls for 55% of a portfolio to be mixed between short-term and long-term bonds, mostly treasury bonds. How we doing time? 16 minutes? We still high bidder? Now throw in let's have some fun. So folks, can I just segue? You guys all understand that from the treasuries, right? Hopefully everybody understands that with the treasuries. So what I want to do now is I just want to kind of seed what we're going to be doing here in just a moment with this stupid car. So here she is. This is my unicorn. Stephen, can you see the unicorn?
Yeah, man.
There she is. That's the car. For some of you, you're just like, I don't know what that is. That's a 1979. Yep, it is. It's a 1979 930 Turbo, one of the most iconic, rare Porsches that you can buy. And it has killed more people than any other Porsche. So there she is, the Widowmaker. All right, so this is the car we're going to try to buy. Now, how does this site work? Well, this site is quite simple. You go in and you place bids. Let me just show you. See, our high bidder right now is at $81,000. That is Dash 12. He's one of my enemies at this present point. So if I want to bump Dash out, I just go in. Okay, I want to confirm that. Makes a pretty little sound like that. So now BYOB, I think you all know who that is now the high bidder. Now, nothing's going to happen and be exciting until we get 1 minute in. Because every time 1 minute hits, all the bidders are going to start bidding on this. And what's going to happen is every time I bid or that other gentleman bids or whoever the other person is bids, it resets the timer at a minute. The stuff gets really stressful, really intense. But if I win this car, I'm going to buy it with my private banking system. And I will show you if I win it, and even if I don't, how I'm going to do that. Now, again, whether or not you're into cars or not doesn't make any difference. Okay?
Real fast, click, Chris, while you're there, click your name, click the BYOB. And this is what's going to scare people, because you're bidding on this Porsche. So you see at the top, so people are like, who's bidding against me? Oh shit, this guy buys a lot of Porsches. Yeah. So be scared of you.
So they're going to look and they're going to see that I've won 2 other Porsches, both, you know, I don't know if that's an iconic one, but this is 993. So they're going to see that, and they're going to see that I've been bidding on the same, pretty much the same car. Here's a 930 turbo. Here's very similar, a Targa M491, which I wasn't going to go any higher than where I was. But this one, yeah. So these people that I'm bidding against better understand I'm serious. All right. So we're just going to have some fun with this. Fair enough. So let me stop sharing. But you understand the treasuries. Now, who else buys treasury bonds? Well, China buys our treasury bonds. Maybe not right now, but Japan definitely buys them. Japan is the #1 holder of U.S. treasury bonds. Every other country buys treasury bonds. Why? Because the United States is the nicest house in a shitty neighborhood. And they all understand this. But you know who else buys treasury bonds? At a very, very large dollar amount? Giant mutually owned life insurance companies. Yeah, it's where they put your money. You make your premium deposits into your policies. The insurance company takes from their general account, which always has new premium deposits coming into it. They have to make that money go to work. So what do they do with it? Well, a large percentage of that money they use to buy treasury bonds. So do you think insurance companies understand what I just taught you about? Of course they do. They've got people way smarter than Stephen and I working for them. We talk to these people when we go to the conventions. We literally sit toe-to-toe with their big CFO. I know his name, like he's a Porsche guy too, so we have lots of cool conversations, and we just talk about this stuff. But it's a conversation like we both know what we're talking about. I'm like, hey, you guys must be loving these high interest rates and these low prices. Oh yeah, we're gobbling up treasury bonds right now because we're basically putting a tailwind behind our money so that we can support higher dividends or dividends into the future. I don't want to put words in their mouth. They're not saying anything about higher dividends, but we have been going up on dividends. So that's how they do it. If they can get a higher yield today on the bonds, they can lock them in for 10 years, 30 years, but they buy a blend of bonds. They're really smart. Insurance companies own tons of treasury bonds, which always surprises me when an advisor or when a client says, oh, I don't want to buy treasury bonds. I don't think they pay enough. You mean you don't want to do what the wealthiest people and the wealthiest institutions are doing, like insurance companies and banks? Because banks with their tier 1 capital, they buy life insurance, okay, called BOLI, which is basically like whole life. And then they also buy treasury bonds. Insurance companies buy treasury bonds. Ray Dalio in his portfolio, look it up, all-weather portfolio, Ray Dalio, 55% treasury bonds. Like, come on. Like, are we going to listen to our advisor? Are we going to listen to the person who's selling us stuff? Or are we going to just follow what the wealthiest people in history are doing? Well, we should just follow what the wealthy people in history are doing, right? Because that just sounds like it makes sense. And it does make sense. So when you're looking to apply this, I cannot give investment advice. Okay, so actually now that I just thought about that, I gotta put my little disclaimer up here real quick. So if you guys don't mind, before we get into this car. So here's a list of ETFs. This is a really easy way for you all to get into treasury bonds, because you don't need to buy them direct through treasurydirect.com. You can just buy them in your 401k. You can buy them any which way you want. All right, here's the disclaimer. Any opinion expressed by me, my castmates, is solely our own individual opinion and not investment or personal financial advice. This content is for informational purposes only, and this information should not be relied upon for investment or other financial decisions. Nothing contained herein is financial, legal, or tax advice. So the reason I say that is because I'm talking about treasury bonds, which is an investment. There is risk, time risk, interest rate risk, all these things. I'm not recommending you buy these. I'm just explaining how they work, and I'm explaining how they could work into your portfolio given the current situation. You have to be the decider. You have to decide how to do this, but I'll give you some resources. Stephen, put up those. Oh, you did it right in the chat.
So you can really pull up any of those and you're going to see exactly the same thing. In the last 5 years, the charts on those things has dropped. Why? Chris just talked about it, because rates have risen. So the idea is you buy these things, get the yields up high, and then as the yields start to lower, then the price of those goes up, we sell and we make money. That's the whole simple way.
Bingo. Bingo. Quite simple. So you can do it through ETFs, which is what I've been doing, not suggesting or recommending you do that. If you wanted to buy the bonds direct, you could do that. Son of a pup. That little noise, I don't know if you heard that. That was somebody just beating me in the bid. That's not going to be a good sound unless it's me doing the bidding. But anyway, back to these ETFs. You can buy these ETFs in any platform you want, from Schwab to, I don't know, Fidelity, Vanguard, wherever you have your funds for the most part, with the exception of maybe an annuity, like a variable annuity. Maybe a 401k won't have these ETFs, but for the most part, they're pretty easy. So copy and paste those, do your own research, do your due diligence, talk to your financial advisor about whether or not this is a wise thing for you to do. I've already told you why it is and why I think I'm doing it, or not why I think, why I am doing it. But I want you all to make that decision. So the other thing you can do is you can go direct to the government. Stephen, put this in the chat, treasurydirect.gov. Treasurydirect.gov. You can buy bonds direct from the United States government. The only issue I have found, when you buy them direct, you have to wait for maturity. If you don't want to wait for maturity, you basically just transfer it over to your brokerage and then sell it in the secondary market. It's just more steps than the ETF. The ETF is quick, fast, easy. It's a really, really easy process, super easy process. So with that being said, if you've got a 401k or a qualified retirement plan, you would need to do a little bit more work, because you're not going to be able to just find these ETFs in most 401ks. You're not even probably going to be able to find treasuries, but you can look through your offerings and you can look for things like government bonds, or you could look at it, it might say treasury, but you might want to just call your 401k provider, and you might want to just get in with the 401k provider and ask them, hey, do we have any funds available to us that are primarily invested in treasury bills and treasury bonds? And then they'll send you a prospectus, review the prospectus, have your advisor or the person on the phone explain it. And if it is if it is what you want, then you just have them move the money in your 401k. But the thing I gotta really preface here is, if you get into treasuries, just understand this isn't a long-term thing. It can be for you, but for me, I'm buying treasury bonds, and I have been for the better part of 2 years. I have lots of them. I've been buying these ETF treasury bonds, and I've been losing. I'm down about 14%, but it's okay because I've done the math. I've done the math on what my potential return could be, and I'm looking at a 20 to 30% upside in price movement. And how do I know that? Well, I just went back to a prior recession called the pandemic. They didn't call it a recession, but a prior downturn in the market. I looked at where treasury bonds went, which was like 180 for the ETF that I have. And I just said, okay, it's pretty safe to say that it's going to go to 150 or 160. And I've been buying them at like 70 and 80 bucks. So if you just did the math, it's like a 20 to 30% upside when I sell the treasuries. And I will sell the treasuries. I will not get greedy. I will not start sitting there thinking, oh, wow, they're going to go higher. When I hit my mark, I'm out and I make my money. And then I figure out what to do after that, which will probably be lending or something else. So that's how I do it, okay? It is not a long play for me. I'm not buying treasury bonds for someday 20, 30 years from today. Maybe in the future I'll buy more, but these ones that I'm buying are a very unique opportunity that I see in the markets, a very quick and easy opportunity for me in the markets, given where we're at, what's going to happen, and the facts that I laid out earlier. So you can do the same thing. But the other cool thing I did in a 3-day Money School Essentials that we did a while ago, I showed you how you could use your policy to buy treasury bonds, put money into the policy first, take the loan from the policy, buy the treasury bonds, take the yield, which is paid out quarterly from the treasuries, and move that money back into the policy. Now, things were different then because rates were a little bit higher on the treasuries, but it would still work today. If your borrow cost on your policy is 5 to 5.25, you would look at a treasury bond that pays that or more to make a spread. You would take the money out, buy the treasury bonds, take the yield that you are paid, 5.3 in that one, and take the yield and put it back into the policy as a loan repayment. I did that. So that's what I want to tell you about, because you can use your policies to do this, although it's not going to be a really lucrative thing until the price of the bonds goes up, which is why we're going to pivot and we're going to go with 4 minutes and 30. That's so funny. Brandon's over here. He's got these things that we used to use at our RIAs, and it's got like 5 minutes, 2 minutes. So if there's a speaker, we just put it up. He's flashing the 5-minute warning. You can tell we're pretty serious about getting this car in. Yeah. So I think what we should maybe do is just hit 1 or 2 questions at the. Breaking news, this just in. Are you sick of having your money lying around not doing anything? Well, we've got the solution for you. PrivateMoneyClub.com. Back to you, Chris. I'm going to share my screen. Go ahead.
I want to get a real quick poll before you share. How many people think Shawnee should buy this one so they have matching cars? I mean, it's like identical, right? It's perfect. All right. Look at that. Look at that one. Look at that one. Look at that.
That's hilarious.
Chris, you guys got to do it. All right.
Oh, that's funny. Well, here, I'm going to get a diagram up in preparation for this, because one way or the other, I'm going to show you how I'm going to do this with my car. And we're actually going to put the real numbers. And this is how we're going to finish up the webinar. I think this will be kind of fun. So Stephen's got the car here. So Stephen, can you make it any bigger than that? So Brandon, go ahead and place a bid. Get used to doing that. Let's go 83,000 on it. Now, folks, listen, I want to be very clear. By no means am I trying to brag about the car or anything else. It's a bad habit of mine. Okay, it's just something that I do. Here's my wife calling to let me know. Are you calling to let me know that there's only 3 minutes left? Okay, we're already on it. We're doing it live. Thanks. Okay, bye. My daughter loves red cars, so there's a whole family thing going on here. But the reason I'm doing this car is because I don't have anywhere else to move money. Now, listen, it doesn't matter that it's a classic Porsche. Like if this was a Kia or if this was a Chevrolet, it doesn't make a difference, folks, because it's just a car. That's all it is. But the reason I'm buying the car is because I've got money sitting in my banking system. I don't want to invest that money in the stock market. I have lots of private loans out there right now, and I'm not looking to go any deeper into private loans given right now. I'm sort of on pause, if does that make sense? I'm just on pause for investing money, but I still need to move money. So I've got money sitting there in the policy, making money, making interest. And I know that if I take the money out of the policy and I do something with it, I still make interest and dividends on all the cash value in my policies. Everybody understands it. It's called uninterrupted compounding interest. So if I take the money out and I buy a car, okay? Now, yes, this car will go up in value in the future. My guess would be if I hold this car 10 years, the car will be worth over $200,000. Now, I don't know that. That's speculation. But here's what I know for a fact. I called the bank. The bank borrow rate for a car right now is 7.25%. So real quick, on the board here, I'm going to write 7.25%. Did you place that bid? Yeah. Okay, there we go. There's that little beep. That's us. So a car loan would be 7.25%. I'm going to try to draw this car, and I'm probably not doing a good job. There it is. Okay, terrible. Whoa, getting hot and heavy now. This Dash 12 guy really likes it. So I'm bidding against 2 people. These are the same 2 people that I've been bidding against from very early point. They're going nuts. We're going nuts. We're at 85,000. But actually, here, why are we not sharing our screen? There we go. Stephen, stop sharing. I know that. So can everybody see this? You can see what's going on here. So you see, here's the bids. We're bidding, this Dash 12 guy's bidding, and we're just going to keep playing this game. So we're at a minute 51. Pretty freaking.
I stopped sharing for a minute. I want them to see your screen when you're drawing, but yeah.
Yeah, so I got 2 people. So Stephen, pay attention. He's on it. So yeah, just keep doing the minimum increases. So we're just going to keep doing this, and we're going to see where this thing settles. But then after I'm done with this bid, win or lose it, I'm going to show you how this would work. But all I want you to do now, as we're getting caught up into this bidding process, you're going to see this. It's going to go on for a couple minutes here. No big deal. Some of you will leave because you don't even care about this. But I don't think you should leave, because what I'm going to show you next of how this works is more important than you watching this charade of us bidding on this white unicorn called a Porsche 930 Turbo. Love it or hate it, doesn't matter. Everybody's got their thing, right? Some of you, I don't know, some of you buy gold coins. Some of you invest in real estate, which I also do. But some of you, everybody's got a thing. Like, I just like these classic Porsches, and they are expensive, but I understand them. I know, like, and understand them. Law number 3 of wealth: protect your wealth by investing in things that you know, like, and understand. I know, I like, and I understand these cars. I understand the investment in these cars. I understand what they do, what they don't do, and I understand the risk with these cars, okay? So as you can see, we just keep doing this. So what we're trying to do is we're trying to instill dominance. I hate to use that word, but that's what we're trying to do to these 2 other people that I'm bidding against, which at this point, we only have 2, but there will be a couple more that will come into this. Done this a couple of times. So I want to wait. Why don't you give it till a minute, Brandon? So we're high bidder. If somebody bids over us, just leave it go. I want to get under a minute. So here's what happens after a minute, so there we go. This guy really wants the car. He's at 90. Okay. So when we get to the point where this gets under a minute, which you're going to see in a second, every time you click it, it will reset to another minute. Actually, I think it just did that, didn't it? Yeah, it went to 2 minutes. So we got to play this game a little bit, but once we get under a minute, it'll keep resetting every time a new bid comes in. But what we're trying to do here is we're just kind of testing the markets. Think of this like investing. You know, you're in there and you're seeing who you're trading against. Like if you were in the pit of the wall or the stock brokerage over there, the Wall Street. Oh my God, what am I trying to say? Forgetting it. But anyway, if you're in that pit, it's not coming to me because I'm caught up in a car, and you're doing this, like you're trying to see who you're trading against. So what I'm trying to do is who are my people that I'm trading against, and how resilient are they? Now, we did some research, some due diligence on a couple of these people. And we wanted to see, have they ever bought a car on here? And I think they had not, right? So neither one of these 2 people that we're bidding against have bought a car yet. They've bid, but they've stopped. So what we need to find is, where's their pain? So after we hit under a minute, what I want you to do is I want you to put a bid in for 91,430. And then we're going to see how fast somebody comes in, because now we're getting down to under a minute. How many of you are like, yeah, how many of you are kind of getting into this? Like you're kind of emotionally getting charged up. Oh my God, less than a minute. Okay, put the bid in. There we go. So now we got it reset at 2 minutes. But what we're doing is we're again playing a game. We're playing a real game because it's real money, but we're playing a game. Now, why does the money not matter to me like it does to everybody else? Who can tell me that in the chat? Why is it that the dollar amount that I pay for the car doesn't matter as much to me as it does for these 2 other people I'm bidding against? Who can tell me that? That's right. Tess said, because I'm going to get all the money back. No ifs, no ands, no buts. And I'm going to show you how I do that. So to me, if I pay more than what these guys are willing, because I'm the bank always wins, folks. I get all the money back. So it's just a freaking number on the screen. Some of you are looking like, oh my God, that's crazy. Like, what would the payment be? Well, you're going to find out. But it doesn't matter. Actually, it does. It does. Because here's what matters to me. I know if I buy this car and I fund this through my private banking, I'm going to have to write a check or do a bill. We do bill pays every single month for the exact amount I would have paid that credit union, which I don't know what the payment would be, $2,200. It depends on what we buy the car at. 54 seconds in counting. Keep refreshing. Stay current as we get down to under 30 seconds.
I know what this car is worth, Chris. I might start bidding myself, man.
I was going to say, there's no way this car is selling for 91,000 just to set the bar, right? These guys might think that the car is going to, oh, see, now we got a new guy, Harry C. I don't know who Harry C is. This guy came out of nowhere.
He was in
Harry C. Give Harry C a little taste of BYOB, because Harry C isn't buying this car from his own private banking system. See, most of the people that are buying cars on this platform are dealers or collectors. So a collector is the worst person to bid against because they're just buying it for nostalgic reasons. They're buying it for collector reasons. But a lot of these guys buy these cars and resell them. They're dealers. So they buy them on here and then they turn around, they do a couple things to it, like they'll do some paint fixes on it, and then they turn around and resell it a year later or 6 months later. That's what a lot of these guys are. You on it? There we go. So now we're telling Harry, nice work signal. So now we're telling Harry, okay, hey, you should get to know who BYOB is because you're not winning this car. Now, it's in some cases, if this keeps going, I'll put in the comment, I'll say, nobody's outbidding me on this car. And that'll just kind of set that floor like, hey, you keep bidding on me, I'm just going to waste your money. Because what they don't know is I'm getting all the money back no matter what. But I do have to make monthly payments. Like Shauna is having anxiety. This is fun, right? Like, Listen, money, how many times do I have to say this? Money is nothing more than a means of exchange. Money is a tool. When we get emotional about money, which we all do, it becomes a different game. Sean is getting anxious. I'm not. I'm sitting here being like, okay, what's the strategy? How do I strategize and win this car? How do I make sure that I outbid these guys? Now, you could just purely outspend them, but is there another play? Because listen, if I can get the car for less because of a strategy, doesn't that make sense? If a trader, if you were buying a stock and you had a strategy to basically make more, a little bit more on something, wouldn't you apply that strategy? So we're just trying to show dominance. You see, the other two guys haven't, but this is the thing. This is where people on this bidding site get excited because they're like, oh my God, oh my God, oh my God, I think I'm going to win it. I'm not going to win it. There's that guy again. We got a minute 57. See how it keeps resetting it too? Yeah, just put dominance in there. Just let them know, like, hey, man, I don't care who you are. There we are. Ooh, Hurricane 89. Now, who's that son of a pup?
That's a new one. Hurricane's new.
Yeah, Hurricane's new. Okay, so we got Harry's new, Hurricane's new. We have not researched Hurricane or Harry. I don't like that, but that's just the game.
Harry was in at 82 earlier, and then he came back at 92.
So if any of you want to kind of come into this trading pit with us, what you would do is go to bringatrailer.com, pull this auction up, and research Hurricane 89. Has he bought any cars? Does he have any history of buying cars? If he's bought 15 cars, we could have some problem here. Look up Harry C. So this is research, folks. Literally, like, we're just buying a car here, but I'm teaching you lessons that go far beyond cars. I'm teaching you strategy. I'm teaching you due diligence. Always know your enemy, because you win the fight before the fight ever starts. You have to understand your enemy. Now, when people come out of left field or flank us, we don't know about that. So now we have to react quickly and figure out who they are. There's our guy again. Okay, at 96,000. All right, so let's, what do we got? 2 minutes? Just wait a second. Let's take it down under a minute. Let's let him think that he's got the winning bid. Now, Hurricane could come in and Harry could come in, and it seems like we may have lost, who was the other guy? We may have lost DAS 12. And we kind of knew that because DAS 12, when we researched him, he hadn't bought any cars. He bids on cars, which, hey, it feels good. It's fun to go to your buddies at, at night and you're like, oh man, I almost won this 930 turbo. It's just, but he knew what the car's worth. Most of the people on here are collectors, they're dealers. They know what these cars are worth. Now, I already told you folks, now, when I called the bank, I had the bank pull up the value, and the banks value them different ways. NASD, I think, is one. Kelley Blue Book, which doesn't value old cars like this. But the car, from the bank standpoint, the retail value of this car, actually, who can guess at what the retail value of this car was from the bank? Does anyone want to take a guess? All right, plug it in. 96.5. Let's go there. Does anyone guess?
That's a good question. Back in 1979?
No. Today, what this car is worth, NASD or, from a bank. No problem, Mike. Thanks. Well, the bank came back and said 166. So the bank will lend up to 166 on this car. Not that I'm going to the bank, but I'm just saying that's what the bank would lend on this car. Wow. So now we're 96.5 into a car that the bank thinks has a retail value of 166. I don't think it does. About a year ago, this car sold for $130,000 on this same site. So now we got a new player. So you see, now we're getting flanked a couple different ways here. We got these people coming in. There's our guy again. I think that's our biggest contender there. So go in, hit him again, 98.
B. Colombo is the first one. B. Colombo is the first one that actually bought a Porsche last year.
Okay. So B. Colombo could be a serious contender. Yeah. Okay. This ISIK guy, Gunjan, I don't think he's bought any cars.
He's a bidder, dude. He's just a bidder.
He's just a bidder. I don't think he's bought any cars. And listen, here's the mistake. Some of these people that bid on these, listen, you guys are getting emotionally charged, right? You're kind of getting excited about this. Well, these guys are excited too, because they're playing with real dollars. They're not getting all their money back for the car. Some of them have to sell the car. So that's a risk. If they can't sell the car to make a big enough spread. Now, here's the other things. When we buy a car and bring a trailer, the car, they charge a fee, but they charge it to the buyer. So whoever buys this car is going to have to pay like $3 to $5 grand for a fee for playing on Bring a Trailer. So you got to add that in, plus there's shipping. Now, this car is in North Carolina, so I'm going to more than likely just drive or fly down there and drive home, or I'll trailer it up. I'll see how much it is to ship. One of the two ways. I think it'd be fun to drive it home. It's not that far of a drive, but it's not a short drive. All right. Tell me this is selling and not, I don't know what RNM means, but you see, it's fun because now there's commentary coming in. There's people literally commenting on this whole bidding process, and they're just like, oh, so you guys aren't the only ones watching this. There's people just sitting back watching this, being like, oh, look at this. They got their popcorn and their soda, and they're just having a good old time. So now we're at $99,000. Now we're hitting real dollars here. So this ISIK gun gen guy, don't go yet. Don't go yet. Yeah, Felix said he'll drive it to me. We got some shippers on here for sure. So we got shippers. So folks, if any of you are in logistics and could ship the car to me safely. Oh, see now who's B Colombo? Oh boy.
He's the buyer.
Yeah, he's bid before, but now we're at 100 grand. So now we're starting to like get into that range where some of these bidders that are just bidders are starting to think, well, it could sell for that. So if
RNM is reserve not met, just so you know, reserve not met.
Oh, I know. We'll take it up to that. So keep going. There you go. Why does RNM win so many auctions without ever bidding? I don't know what they're talking about there. Who's the seller of the car? That's not RNM, is it?
No, it's a joke, meaning reserve not met.
Oh, yeah. All right, so go 101. My guess, I'm just going to tell you guys right now, my guess is this probably has a reserve around 110, 120. That'd be my guess, but we're going to find out. Because every time we do this, it resets. But what we're going to do is we're going to up the ante in a second. We're going to show our dominance in just 1 second. We're going to go up not by a $500 increment. I'm trying to just weigh this out and see who the players are, who are not. I'm trying to understand who is the enemy here. Who do I need to outflank, okay? And what we're going to do in a second, and we're going to let it get under a minute, we're going to come in not at a $500 increase. We're going to come in at a $2,000 increase, okay? So we're going to go from 101 to 103. What would that be? 103? Yeah, we're going to go 103 if somebody doesn't come in here. So we're going to up it by 2,000. It's kind of like playing poker, right? Colombo comes in at 102. So he's up 1,000. So he just did that. See, it's kind of funny. What I just told you, B Colombo just did. So we're going to wait till we get to under a minute, and we're going to come back. What'd he do? He just came up. Well, let's just see. Okay, there's one. Oh, see how this is going now? See how people
2,500 now.
Okay. So in a second, we're just gonna let this settle for a moment, and we're actually gonna. So he just went up 2,500. We're gonna go up $3,000 on our next one, because listen, folks, we got to hit the reserve not met. We got to hit the reserve too, and I don't know how that works. I've never bid on a car that had a reserve, so we're gonna figure this out. Yeah. See, now this guy M Link K has obviously sat down and watched this a few times with some popcorn. He's like, here we go, because he knows at this point stuff's getting real. This is getting real serious right now. And he knows that. So this is where and Chris, I'm going to hit your question here. I see you guys all got questions coming in on the Q&A. I promise you I'll hit them all. Chris Ash came in, which would be better, treasuries or T-bills directly. I like ETFs. I like it because they're nimble, they're easier. I don't have to deal with, I bought treasuries on treasurydirect.gov, but okay, so we're at 59. So there we go. So now we're at 108. Whew. Yeah. All right. Here we go. It's right. How's everybody feeling? Anyone else kind of getting those butterflies in their belly? Oh, look at this. B Colombo comes back. Hit him real quick. 110.
We can do the whole auctioneer thing. Here we got a modified 1979 Porsche 93 Turbo. High bid. We got BYOB in 110. We got B Brandon over at 111. Right here 112.
Yeah. So this is entertaining for some of you, and like for me, it's also entertaining because this is just investing for me. It really is. The only contention I have here is I got to make a monthly payment back to my policy every month for the same amount I would pay the bank. But let's just say things got rough. Let's say my income went down. I couldn't afford the payment on this or the payment on my other cars. You all do understand, because I own the bank, I set the terms. So if in a year from now we go into a recession, things get tight income-wise, can I reduce my payment to my banking system? Of course I can. And if I did reduce it, we would amend the note and we would just extend the term. So instead of it being a 5-year note, maybe it's now a 7-year note. We are in control. B Colombo answering back at 111. So answer back at 113. We're still under the oh my God, what did you call it, Stephen?
Reserve?
The reserve, yeah.
I don't know what the reserve is though. I don't think it's.
Well, I don't know either, but I don't know if we've hit it yet.
Right.
Does it say anything about it?
No, I don't think on bat until it's over. They don't tell you the
Might not. Yeah, we might. That's a good point. We might not know if we're going to hit the reserve until it's over. But at these prices, we might be getting close to the reserve. Now remember, these other folks that are bidding probably know the same thing I do. This car sold a year ago at 130. So it sold a year ago, and there's been a lot of work done since a year ago. So maybe that's what they're looking to get, is around the 130. So here's what we're going to do next. We're going to see who answers back. We're going to let the clock go down. What does everybody want? Let's get everybody else involved. What do you all want the clock to go down to before we throw in our next bid? Because what we're going to do is wherever we're at, we're going to bump it to 120. How about that? I don't know if that's a smart thing. 27 seconds, 24 seconds. So here's B Colombo at 114. Let's just see what happens. Yeah, let's take her down to 30 seconds. Is this okay with everybody? Like I gave everybody the option of doing this. We're losing some people, but not a lot. Like hopefully some of you are entertained, but I do want to get to the point where I show you how this is all going to work. Oh, our guy. Is our guy the seller? So we might have just gotten a signal. Our guy. Who's the seller of this car? Oh, RR Raleigh. No, Raleigh, North Carolina. So that guy that you said almost there, does he know something? That's the thing I'd be asking. Does our guy know something? He's got 7,000 likes on here. Does he know that we're close to the reserve? Maybe he does.
I think he knows it's sold for 130 last year. I got a new transmission and air conditioner, so we're getting closer to where it probably should be. Yeah.
Hope said it would be a bummer if I lost connection. So Hope, that's great. I want to kind of answer that. I'm smarter than that. So not only if I lose connection here, Brandon's on it. I've got my cell phone right here with the same thing going. So what's that? Yeah, Larissa's watching it. Okay, so Larissa's watching it. And yeah, so there you go. So I've got contingency plans, backup, plan B and plan C for that. Go to 120.
There they go. There's suspect a loaner. We'll let it go at this price.
Well, we just bumped it by $6,000.
Hey,
so what
B Colombo.
We just went all in. We just went all in.
What you got, Colombo?
Well, it's not done yet, folks. It's not done.
Bring it
Make
on,
no two ways about it. I don't think we're done yet.
Go home,
but
Colombo.
All I do know is we literally just came in and we just put our mark on it. Okay?
Colombo
coming in. Yeah, go immediate. And now just go back to the minimum bids, because now we're getting into that range where we don't need to show the work and tender. So we got 122. So we're going to go $1,000. It's got new AC now. At least you want to drive it for the rest of the summer and enjoy it. You know. All right. Moment of silence. There comes B Colombo. So just keep going. I sincerely think like 130 is probably the number for this car. And if I get it for 130, barring that there's nothing wrong, get it for a fair price. I mean, are we crushing it? Are we like knocking it out of the park? Not really, but it's a unique car with a unique build with lots of different mods. So is it worth it? Yeah. To somebody buying it as a collector, it's worth it. But to somebody buying it with the ability to then get all the money back, it becomes really worth it. All right, hold off for a sec. Let's run the clock down. Let's let him think that he's going to win it, because B Colombo is the only guy that I'm playing against. What's everybody think? So B Colombo bought a 1982 Porsche 911 SC Coupe. That is an expensive freaking car. Sean, what did he pay for that 82 Porsche? That's a rare ass car. So he's a collector. So we can establish that B Colombo is probably a collector. That's all he paid for that? Oh, I would have thought that would have went for more than that. So he paid $60,000. So he stole that SC Coupe. But I don't know how many miles it had. There's some things we don't know. But he's a collector, because there ain't nobody buying a 1982 Porsche 911 SC that doesn't know what it is. 76,000 on that one. Yeah. So he might not let it go. Well, Daniel, this is just where you get into it. It's like you got two people here. You know, two people want the car. One's going to have a price where they're just done. Everybody's got their price. I suppose I do, but you know, I'm kind of waiting for my wife to tell me what the price is, but she's not. So she's pretty much just saying, do what you got to do. All right, where are we at time-wise? 40. Take it down to 30 seconds. 126. Actually, let's bring it down. Let's do tests. Let's bring it down to 24 seconds.
The easier part is getting the money back. The hard part's winning the thing here.
Oh, I know. And it gets really frustrating. Did you wait for 24 seconds? You did, okay. So here's another unique thing. So our timers are different. My timer, probably because I'm streaming, is running a different timer than he is. So what do you got? I got a $1.48 on mine. What's yours? All right, let's see what B Colombo comes back at. Now here's what we're gonna do. Next one, we're gonna go down to 10 seconds. So we're gonna start, now it's gonna get real serious here, folks, real serious. We're gonna go down to 10 seconds on this next one if B Colombo answers back. Now, B Colombo's probably going to play. He's not going to play the game. Oh, yeah.
We're getting there, baby.
Can anyone please figure out who B Colombo is and just make him a call, put a call into him and just be like, back off, please?
B.
I'll split the difference. All right. Now comes the waiting game. The best part about this whole thing is when I get to show you how this works. And I'm just going to need some people to help me with some calculators, but I'm literally going to show you how to do this. So whether or not, I mean, even if you guys are buying a Chevy Blazer or I don't know, an Equinox or maybe a BMW, whatever you're buying, like I just want to give you the roadmap on how to do this using your own private banking system. Yeah. Yeah, let's do the minimum. So I wonder what B Colombo's thinking. Anyone kind of on their mind? Like, what do you think B Colombo's thinking right now?
Who the hell is this BYOB guy?
Yeah, probably the same thing we're thinking, right? Who the hell is this BYOB guy? Yeah, he's thinking bring your own beer, but little does he know we are bringing our own bank, bitch. All right, where's he from? I don't know. The worst place he could be cut from is from Carolina, because that means he could just go pick the car up. And that means he probably looked at the car. All right, put the link in the webinar for the chat, exactly, hoping your power doesn't go out. Yeah, that would suck if my power went out. So Steven, you're gonna have to have, well, actually, Dad, please don't let our power go out. But if it did, you know what that would mean? All right, get ready, because we don't want to play games here.
10 seconds.
10 seconds, you ready? 3, 2, 1, place it. Stay away, B Colombo. Back down, damn it. Yeah, no, I do. But listen, like, here's the thing. If the power went out, do you think maybe that's a sign from God? I'd probably just call it a day if the power went out. How I've done this in the past, folks, is I've literally placed my final and best offer and I've shut the phone off. And the gray Porsche that you've all seen, that's how I won that one. I didn't think I was going to win it, but I put my final and best and I ended up winning it. Oh, Steven, you're in there playing games. We got the Peterbilt guy. Yeah, can somebody look up this B Colombo's history here? Holy cow, wait, how did the attendees just jumped up to 104? I guess you guys are liking, this is exciting. I'm sorry that it's taking so long to win the darn thing, but I mean, listen, we'll get to it. Yeah, Daniel's like more cursing. So now we got to be really careful. We think we've got it. What I need you to do is I need you to put in a bid for, this is where it's going to get really strategic. Oh, he comes in at 129. You son of a pup. All right, so we're going to take it down again to 10 seconds. You're going to go in at 130. But what's going to happen here? This is where the strategy kicks in. If we got this guy, we can tell he's serious, which sucks. So what's going to happen at this point is we're going to have to be ready because we're going to run this clock down as close as we can to the end, and we're literally going to put in a bid. But if he puts a bid in higher than us, we lose the car. So like literally, it's going to come down to a couple seconds here where we put a bid in. If good means $50,000 in $500 increments, this is getting spectacular. These folks definitely have popcorn. And I'm actually starting to get to that point where like, all right, come on. I want B Colombo to go away. Now B Colombo is posing a problem for me. So now I'm not liking B Colombo here. All right, why wait on the clock if it resets to 2 minutes? Because so that's a good question, Daniel. So Daniel said, why wait till the clock runs down if it resets at 2 minutes? Because if we get down to a couple seconds, I don't know this to be fact, but there's a slim chance that maybe it'll just kind of push through, but probably not, because that would be dumb. 26 bids in the past, 1-1. Thanks, Judy. So he's bid a lot, but he hasn't won any. So he must really want this freaking car. All right, you ready? 10 seconds. Actually, go down to like 8 seconds and hit it. But here, we got to be ready. So here, you're going to go down to 8 seconds. I gotta, what was that noise? Was that you? I don't know what that meant.
9, 8, 7, 6.
Go.
5, 4.
All right, so this is where, so it did reset. This might just come, yeah. So, all right, so we know that we're not going to beat the clock. This is just where it's going to come down to. You're just going to have to muscle the other person out. 130 is what it sold for before. So, you know, we got our support and resistance levels. If you go to stocks, support and resistance levels. Some of you watching this are just like, this is idiotic. I understand that because it is. It is pretty idiotic. There's a lot of other things that you could do with $130,000, but listen, I'm still going to make contributions to my private foundation. I'm still going to give lots of money. My wife loves giving to the charities that she does and working with saving animals and cats. And so we're doing a lot of other things. And, you know, yes, we're on the brink of a slowdown. So this could be we could just sit on cash. But again, I run a pretty conservative, lifestyle. I don't spend a lot of money. I don't buy expensive things like, watches and clothes, and we live pretty humbly. All right, so now what we got to do, we got to know that this guy's going to come in at the last second. So I've got my chamber loaded here at 132. What are you loaded at? Well, what do we increase? Well, we don't know what he's going to increase it, but it's going to reset the clock anyway, I think. We just got to be ready here. There are no $500 increments allowed over 100,000. Minimum is $1,000. So there we go. Yeah, go 134 on yours. I'll go 132 on mine. 12, 11. Now, what we're not trying to do is we're trying not to listen for that sound. Holy smokes.
Got it.
Did we hit reserve? That's the question. High five. How's everybody feeling? Everybody feeling pretty good?
Congratulations. It says sold. Yeah, you bought it.
Everybody feeling pretty good? All right.
I'll throw out a congrats.
All right. So Brandon, I still need you out here because now we got to show everybody how we're going to buy this. All right. Okay. Holy crap. Woo! All right. 130. Holy shit. What's that movie where he's like saying a bunch of stuff and then he's like, holy shit. All right. Calculators. All right. Now we're going to get real, folks. Now I've got 20 minutes, a little less, to show you exactly how this works. Steven, I need you to pull up a car loan calculator, and I need you to share that on the screen.
All right.
Okay, so there's a couple things, folks. So everybody that's watching this, I hope you're enjoying this. This is not what I planned to do. I hope everybody understands this. This is not what I thought today's training was going to be, but everybody, you were all the voters for this. So now let me show you how this works. And now why you're going to learn why it didn't matter. It mattered what we paid for it, but I feel good that I got this car for $130. I actually feel really freaking good because I know a year ago this car sold for $130,000 and it didn't, and the engine had issues, the transmission had issues, and the AC wasn't working. So here we go. So Steven, $130,000, 7.25. We need to know how much would the average person, if they finance this car, pay to a bank. That's what we need. And I want to go a 60-month loan.
Yeah.
Put your earmuffs on if any of you don't like swearing, but here's what my wife said. Fuck yeah. Talk about a supportive wife, right? But see, my wife's on the same program I'm on. She knows how this works. She's like, we're getting all the money back, bitches.
2,590.
Oh, wow. I don't know who 911 GTS is. How much is it? $2,590 a month. Okay, so there we go. $130,000 loan, okay, for this. Steven, what do you got there?
What, any down payment?
No down payment, no.
Okay, no trade-in. You're in New York.
I'm going to buy it with, I'm going to buy it with BYOP, so that's going to be Montana.
Any sales tax?
Well, I'm not going to say that, but you can all figure out why I'd buy it with an entity in Montana. I don't need to tell you why.
Okay, you want to do any title, registration fees, anything?
No. 2589. All right, so yeah, 2590. So everybody understands what we just did. $2,590 would be the payment somebody would make if they were to do this car through a dealership, okay? So that's how much somebody would pay for the car if they were to buy it through a dealership. So we know that's our baseline number, $2,590. That's how much money I'm going to set up a bill pay for back to my policies. Now, this is the cool part. So let me show you this. I've got, I don't know how much I have. How much did we figure? About $180. So all the money in my policy, my cash value, I got about $180,000 in available cash value, minus all the other loans, the other cars. I got 180 grand, okay? So what I'm going to do, folks, is I am going to take a loan from my policy for $130,000. Now, the rate that they charge on my policy is, I think, I don't know what it is. Let's just call it 5.25%. Can you figure out what would be a simple interest calculator? And you could just do this with your phone. 5.25 on one. And folks, just so everybody knows how to do this, Steven, can you stop sharing? Let's just show everybody how to do simple interest. It's actually quite easy. So how the insurance company charges interest is you would take 130 in your phone and you would do it times 0.05. Okay, $6,500 a year in interest is what it's going to cost for me to borrow the money. That's $541.67. Okay, so this is the cost for me to use the money. Now, I don't have Craig on here today to run the calculator, but Here's what's going to happen. I'm going to take this loan out. I know once I take the loan from the policy, my cost is $541.67. I'm going to buy the car. Okay, once I buy the car, I'm going to set up a $2,590 payment from me personally, or actually BYOP, the entity that's buying this, and that's going to come back over here. So $2,590 is going to hit this segregated account. Now, I know there's different schools of thought on this. Some people would say, just leave it in there and then just recirculate. That's the Brent Kessler model, right? Keep moving it out. I don't do it that way. I don't do it that way. What I'm going to do is I'm going to take and I'm going to set up a loan repayment. And actually, Brandon, you might be able to figure this out. I'm going to set up a loan repayment to my policy for $2,590. So folks, every single month, when I pay my policy back, I now will have $2,590 available, knowing that out of that $2,590, $541.67 goes to the insurance company. Can you do the math?
That's wrong, Mark.
What is $568.75? Sorry, 568. I don't know what I did wrong. I'm 0.75. Okay, 568.75. So can you subtract 2,590 and subtract 568.75 from that? I can't believe we just did that live, folks. I literally cannot believe we just did that live.
I want to comment on that listing and be like, we just did this live. If anybody wants to see the recording, we're going to show exactly how to get back all the money.
Comment on it.
Get a bunch of business.
Okay, $2,021.25. Okay, so folks, all of you have been around this campfire. You all know banks make money on spreads. You deposit money in the bank, they pay you an interest rate, they lend that money out at a higher interest rate. You all know that. So here's what we're doing. It's not that we're lending it or doing anything at a different rate. Here's the name of the game. Simple interest versus compounding interest. Simple interest versus amortized interest, okay? So we got to understand that. So over here, a 7.25% 5-year loan is $2,590 to pay this off. So I know the car will be paid back in 5 years to my policy, but $2,021.25 is the amount. Technically, if you figured it this way, it's the amount every month it would make it to my policy and stay in, netting out the loan cost. So I'm already ahead of the game. So we're just going to call this spread one, okay? Spread number one. And if anyone has questions, put it in the chat, put it in the Q&A. I'll answer it. Spread number one is I make $2,021.25. Now, some of you are like, you're a dumbass because it's your own money. It is my own money, but I'm not a dumbass. Money must be in motion, folks. Your money has to be in a constant state of motion if it's going to survive. If it's going to make more money, it has to be moving. Listen, I could just keep this money in the policy. I could just keep this money in a bank account so I feel good, but that's not feeling good to me. That's like, oh my God, oh my God, oh my God. My money's got to go to work. Like my money's sitting lazy on the couch. That can't happen. This gets my money working. And I don't have any desire to do anything else besides this right now. So that's the spread. But here's the thing you don't know. And Brandon, I want you to do some math here for me. What I would like you to figure out is every single month, if I took a $130,000 amortized loan, okay, for 725, 5 years, and I were to pay it down by $2,590 every month, what is my effective APR after year one, year two? Can you figure that out?
Yeah, can I get my computer? I have a program for that.
Go get your computer. We got time. Well, you got to do it quick, so run. All right, so I'm going to show you, but I'm going to take a stab at this. All of you are fixated on 525. Okay, that's how much the insurance company is going to charge me to borrow this money. But you realize I'm not going to pay the insurance company 525 effectively. Everybody understand why? Here's why. Every month, I am reducing this $130,000 loan that the insurance company gave me from their general account. The insurance company gave me a loan from their general account. Okay, from their general account, that's where my death benefit would have been paid from. So if I die before this car loan is paid back, my wife needs to understand she gets a car and whatever the amount I didn't pay back is the amount that's going to be subtracted from her death benefit. So in the beginning, my death benefit will show $130,000 less because I took a $130,000 loan. My 180 never left the account. And just for simple purposes, just if I had 130 in cash value, just so you guys are looking at the same numbers, it's all the same. Okay, so if I had 130 and I took 130, you all know that the 130 didn't leave my account. The 130 collateralized the loan that the insurance company gave me from the general account, which they then subtracted from my death benefit. That's how the insurance companies do this. Remember, I said I got to keep my money in motion. The insurance company has to keep their money in motion too. You see, insurance companies, unlike banks, have to have the money that they guarantee to you when you die. So if you got a $1 million death benefit and the insurance company doesn't have $1 million, they are out of compliance. They have to have the money. So they have to move that money. They have to make interest on that. They're making 5.25, which is about what they'd make on treasuries, right? From what we showed. So now what I'm doing is every month I'm repaying the policy $2,590, effectively reducing the $130,000 loan. So let's just do the math. And Brandon's got his calculator to figure out that, but let's see. 130, no, 2,590 times 12. So every year, if I do this, I'm paying the policy back $30,080. That's how much money I'm paying it back. This is going to get cool, folks. So please pay attention. I know we're going to go a couple minutes over. This is worth the wait. So $31,080 every year is being repaid. So if I subtract that from 130, okay, that means in 12 months, the loan balance with the insurance company, it's a little off because I'm not calculating the interest in, but it's about $98,920. $98,920 at 5.25 is less than $130,000 at 5.25, right? So, and Brandon, when you get those percentages, so let's just do the math. 98,920 times 0.025, whoops, 98,920 times 0.0525, $5,100. So remember, before I was paying $568.75. Now in 12 months, month 12, I'm giving the insurance company $432.78 a month in interest. You see that? It was $568. Now it's $432. What do you think happens on month 24, month 36? Okay, month 48. Do you think this is going to go down, down, down? And if it goes down, what is my effective annual yield? Did you figure that out? If you didn't, here, I can do it pretty easy. So 12 months in, 432.78 times 12 divided by the 130 that I took, 3.9%. So I'm paying it's actually 4%. Well, 3.99 looks better. So you see, after 12 months, folks, I didn't pay the insurance company an effective yield of 5.25. Yes, they charged me 5.25. They charged me 5.25 on a declining balance, which means if I factor the whole thing, I only paid them 3.99. Now, how many of you think my $130,000 in cash value is making more than 3.99%? Anyone think? For all my policies, you think the blended return is more? Am I tiring all of you out? But are you guys picking this up? Chris said yes. Of course it is. I'm compounding over here. My compounding rate is going up. So let's just say all my policies, the blended is probably 5.6%. I was making a spread before I even got started. But because I'm compounding up over the course of these years, I'm actually making more and more because I'm not making interest on 130. I'm making an interest on 130 plus the interest and dividends compounded. So this one's going up, this one's going down. Everybody understand that? Let me say that again. My money is compounding up. The loan from the insurance company is coming down. My spread, my second spread, so spread number 2 or spread number 1, whichever you want to do it, will always go up every year that I do this with this car. Now, what are the risks here? Well, the risk is I got to make a $2,590 payment back to my policy. Is that a risk? This is an interesting question. Yeah, I suppose it is. If I lost my income went down, I couldn't afford it. Those are the risks. But every time I make that payment back to my policy, okay, this is where being your own bank is totally different than the way your mind and the way you've been taught money works. You don't think this way. You've never been taught to think this way. Every payment I make on this stupid car I just bought is money I have in my policy the next day. Do you understand that? I lost no control of my money. I lost no control of my money. So where was my risk? Where's my risk? My risk is that car is a beast. I got to be careful with that thing. That is a 1979 fire-breathing widowmaker. If I decide that I'm smarter or better than the car will teach me a lesson. That's the risk. Hence why risk number 2 is mitigated because I got myself a nice old big fat death benefit. but I'm going to respect this car because I know this car certainly could put me in the grave, and I'm going to be very cautious about that. But does everybody understand what I just taught you? We did that real. I don't care who does trainings about IBC. I don't care how they do it. This is a first and might be the only time ever you will see something like this happen. That is wicked. And I'm so glad Stephen decided that I should bring this up. And I'm so glad you all decided to let me play into this whole thing. But you all understood that. One is going down and one is going up. Brandon's still trying to crunch the numbers, but Craig on our team has created a tool that literally we just put the numbers in. We can show all of you exactly how this would work for your car. We could show every single one of you exactly how to do exactly what I just did with whatever vehicle or whatever thing you want to pay off. And we can show you mathematically how much interest you're paying the insurance company, the APR, and how much money you're making on your policy. And we can show you the spread, and we can show you both spreads, and we can show you the math behind it all. It's wicked where we're at right now, folks. There's nobody else in the industry doing this. And I want to end with this. Stephen, we're going to hit these questions, but I love, love, love having fun. So I'm gonna do a little thing for all of you that stayed. 96 people are still on here. So 96 people, pay attention. I want to give you something. I have 7 t-shirts, one-of-a-kind t-shirts that we printed when we had our show on HGTV. I don't like snakes. I'm deathly afraid of snakes. That guy that I was bidding against, to me, was the snake. So I'm going to give away 7 shirts that say, I hate snakes. Here's the downside. I have 1 XX, which is this one. No, this is an XL. I think I have 1 XX, and the other 6 are extra large. So if any of you want I hate snakes shirt, this one right here, there will never be more of these made. We made these during the time when we had our TV show. If you didn't see Risky Builders on HGTV, you wouldn't know, but there was a part where there was a snake underneath the debris, and I lifted it up, and there was a snake, and I literally hovered. If you've never seen a man hover, I did. Watch Risky Builders on HGTV. But I want to give these shirts away. So, Stephen, I'm going to leave this up to you. How can we give these shirts to 7 lucky people? 7 newbies. Yeah, why don't we do that, Stephen? We got some newbies on here who just saw something wicked for the very first time. So ask them, who's new? First people that comment.
Ellie Casa, she's new.
All right.
Lisa, keep them going. April.
And hopefully Lisa and April, you know, they have somebody that'll wear a XX. I don't have any mediums.
For this person from New York.
All right. So all the people that are saying new, Stephen, go through, pick 7 of them, the first 7. All right. If your name is up there, I need your name and address. That's all I need, name and address. And here's how you're going to do it. You're going to email it to Brandon. Okay. So name and address. If that's your name and address. There you go. Welcome to our new attendees. You all just got to take part in something that we've never done and we'll never be able to duplicate because I'm never doing that again. Well, never say never, but I probably won't do that again. So that's all you do, folks. If you need a XX, oh yeah, tell us what size. I only have 1 XX, so she already claimed it. Yeah, so Reynolds already claimed it. How do you say your first name? How did you say that, Stephen? I-L-L-O-R-A?
Yeah, Eora.
Eora? Maybe we're saying it right, but you got the XX, so XX. So email Brandon. And if any of you want to learn or get on the phone with us to help set up your banking system, there's the link. Stephen just put it in the chat. Okay, it's that.
I got one more cool thing to share though, real fast.
All right.
We also have multiple other shows each week, and so I'll share the link. But we put together a cool little TV guide cover page. So this is our TV guide for all of our weekly shows now. What do you guys think? Look, we were what do they call it? Putting it out into the universe that he was going to buy it this morning, and chicken winner dinner of the auction. All right.
All right. What else, Stephen?
I think that's it. Let me put the link so they can access the other shows. Give me 2 seconds.
And I want to make sure, Chris Ash, you were asking whether it's best to invest in treasuries and T-bills directly or through ETFs. I sort of answered that live. It's really to each their own. So I can't tell you what's best for you, but I do it through ETFs just because they're more nimble. They're easier. I can buy them, sell them much easier. I don't have to deal with the treasurydirect.gov website's a bit clunky. I'm not going to lie. It's a bit confusing, but just about every government website is. So I buy the ETFs. That's what I do. But you know, what's best for you, it might be different than what's best for me.
Leonardo said maybe we should send B Colombo a BYOB shirt.
Oh my God, how epic would that be? Oh my God. All right. Challenge number 2.
Sorry letter.
Challenge number 2. If somebody would please go on and ask him if we can send him a t-shirt, because it was so fun. Please, please, please.
It cost me an extra 20 grand, buddy. Thanks. But I'll send you a t-shirt.
Oh my God. Wow.
And
Holy
for
crap.
anyone new here, this was a bit of a different wealth webinar than we typically do, but appreciate you guys having fun with us today. 4th of July week. Everybody's kind of a little more laid back than normal and just having some fun.
All right. Well, we're losing people. So folks, we're going to call it quits there. Thanks for all of us joining. Thanks to all of our new folks, or the 7 that got the I Hate Snakes shirt. Thanks for literally being part of this campfire and witnessing something that is very unique and will go down as just a wild, freaking fun, nail-biting experience. Thank you, and we will see you guys next time. All right, so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.